Thank you. Welcome in again, everyone. So this is T-bill session part 2. My last one was in November of 2022. I just posted the link for that session in the chat box. Please feel free to click on it. And that is this session. It's Notional as Complete Guide to Starting a T-bill Side Hustle. It's a little over an hour long. It goes through a lot of the things we're going to go over today. And I'm just going to get right into it. So I'm looking at an account today. And I'll try to keep up with your questions. Evan, if I missed something, would you nudge me, please?
Yep.
Thank you so much. So this is a $66,000 IRA. I have positions in it, and I'm going to go over those quickly. And then I have total cash of about $35,000 in the account right now. Right now in this account, I have two T-bills. I don't know where my other positions are. That's crazy. Hang on a sec. Power of live programming. Oh boy. Well, that's my other account. So congratulations. You now see my other account. Apologies. Okay, here we go. This is still not showing my other account. I actually have one position on that Bobby was showing as well. I have one of these 112 things on. I don't know why it's not showing. Let me go over here and see if I can get it here. No. Okay, great. All right, well, sorry for this little stumbling block right off the bat, but I do have a 112 position on that Bobby had mentioned before. I do plan on adding another 112 position today, as well as a T-bill purchase. I'll get into that in a minute. I'm going to go ahead and jump into the rest of the class now. And the first thing I want to show is this page. And if you go into my Discord, all these, not my Discord, actually, not my room, in the Treasuries Strategies section, I have all these windows pinned. So you feel free to click on those. This gives me the Treasury yield curve rate. You can look at various years in the past. You can also look at the current month and then click apply, which is what I like to do. It tells me where the rates have been. Now this goes from 1 month all the way out to 30 years. A Treasury bill is from 1 month up to a year. A Treasury note is 1 to 10 years. And a Treasury bond is greater than 10 years. So this shows the whole yield curve. If you've heard about the term, the yield curve, what is the yield curve? It's just the rates at various spots along the maturity scale at any given point in time. This is where it was yesterday on the 6th. This is where it was Friday and last week. And again, if the month were longer, it would be showing more. Just to touch on it real quick, you hear about the inversion of the yield curve. What does that mean? It means these shorter term rates right here are longer. They're higher than these longer term rates, which is not a normal situation. Normally, these are shorter and it goes higher, higher, higher over time. And this is a sign of Fed tightening. All right, I'm going to get off of that. But this is a tool that I use to help pick which Treasury T-bills I want to go into. So common practice in our room is to go into the 1 or 2 month T-bill. They're currently yielding 475 and 479. I'm going to get into that a little more in a little while. Okay. So my next thing that I want to show everyone is this page, which is, now I'll cut and paste it into the room. This is a handy little site by the US government, Treasury Direct, and they put out all kind of different things. You can buy savings bonds, I bonds, other things here. And you can also look at options. Okay, so we're looking at upcoming options and option results. So this is for upcoming options. Right now, these in blue are the ones that are live and able to have orders entered for. We concentrate on the 4 and 8 week. The 17 week is something that Ameritrade does not offer an option. So we're going to skip that for now. On this page, and I'll copy it for you too. This goes into a little bit of what is a T-bill, what is a treasury bill, how do they work, et cetera, et cetera. I'm going to hang on this page for a minute. We'll go through it in just a minute. So again, the purpose of this is to allow you to utilize, as Bobby has mentioned in our sessions and for the college guys in your class, when we do these option trades, we use cash and we use up what's called buying power. And we're not supposed to go over something like, well, there are various metrics to buying power, but generally we don't go over about 30 or 40%. And the other money is just sitting there unused in the brokerage's money market account, paying less than 1%. With a little effort, we can learn the skills that I'm teaching today and go out and purchase T-bills for our own accounts and earn these 4.75, et cetera, rates like these instead of 0.3 or 0.4, or whatever our brokerage houses are doing. The brokerage houses are basically taking our cash and paying us 0.4, and they're loaning it out to clients, or they're buying treasury bills and they're making the spread on it, just like a bank does with its deposits. So I'm going to bounce back to this page for a minute. Treasury bills, as I said, are under a year notes, are between 1 and 10, and we focus on the short term. I'm not going to go into a lot of detail on interest rates and bond price movements, but the further out you go in time, the more movement there will be in bond prices when interest rates change. In these very near-term maturities, they don't change very much at all. So to keep things very simple, we basically start at the 4 week. Like, people aren't used to doing this. It's brand new. We'll do the 4 week. So how do we do the 4 week? Well, first we have to go into our accounts and figure out how much cash we have available to do. So I have, of the 66,000, I have 35,000 available to me. Okay. I already have 30,000 to $15,000 CDs in this account. And I have more available. So because of that, I'm going to add another $15,000 T-bill, and I'm going to do it now. And as I do this, I want to show you something. Like, this one matures on the 14th, which is next Tuesday. This one matures in a month from now. So I have one maturing in a week, and I have one maturing in a little over a month. So I'm going to go in and I'm going to purchase, because I already have one maturing in 7 days, and because I already have one maturing in 5 weeks, I want to space this one out a little bit. So I'm going to go in, and you basically just go to trade, bonds and CDs. There's different ways to get here. You can go to fixed income new. I like going here, trade, bonds and CDs. You go to treasuries, go 0 to 1 year. And then you go to new issues. These are the secondary market issues. We can get into that if we have time. We deal in the auction market because rates are better and there's 0 commission. So I might have done that a little fast, sorry. So you go in, I'll go back one step. So you go to treasuries, view all. Okay, Then when you're in Ameritrade, these little circles light up to tell you what bonds are active. They're active for purchase now. Like here are the 4 and the 8 week T-bills that we just talked about. These opened up today. The announcement date is the day the auction opens up. The auction date itself for the 4 and 8 week is Thursday, so that's the 9th. And I'll get into some other things like the 13 and 26 week in a little bit. Right now, because I have a 1 week and because I have a 5 week, I want to stretch this one out a little more. I'm going to go in with an 8 week. I want 15 of those. So these are in thousands. And you just type in 15. And then you review your order. And this tells me I'm about to buy 15 of the 8 week T-bill. Here's the CUSIP number. If you recall from our prior session, everything that trades electronically has a CUSIP number. It's like the little electronic ID tag. This shows that it matures in May 9th. And T-bills are bought at a discount. So I'm buying $15,000 worth at something less than $15,000. I'm going to get in that in a minute. I'm going to go ahead and place this order. So I like what I see. I want to buy an 8 week. I see when it matures. I'm confirming that I'm buying 15 and I'm going to place the order. So it goes into my pending order thing here to Ameritrade, where it will sit as a pending order. And the auction for this 8 week T-bill will take place on Thursday. It auctions on Thursday, but the settlement is this issue date, which is next Tuesday, the 14th. So these 4 and 8 week T-bills, the auction opens Tuesday, sometimes Tuesday afternoon. It's on until Wednesday evening, rarely until very, very early Thursday. Don't bank on that. So if you want to get your order in by Wednesday, the auction takes place on Thursday and it settles on Tuesday. So when the auction goes off in your account on Thursday, they will place the T-bill into your account. And if you're on Thinkorswim, for those of you who have an Ameritrade account, it will show up immediately in your Thinkorswim platform without you having to refresh or anything. It doesn't settle until next Tuesday, even though it's showing in your account on Thursday. If you have the available cash, they will take the cash right then and there on Thursday, but it doesn't settle until Tuesday, which is very much like a stock trade. When you do a stock trade, you have 2 days to settle it. You basically have 2 days to settle this, 2 business days to settle it. Similar kind of things going on here. So that was how to go in and execute an order. Does anyone have a question so far? What does CIT mean? Oh, okay. Yeah. That's not for me. Any questions at all by anyone? Okay. I'm going to go back in to my account. And my next thing that I wanted to do, I'm going to come back and do this in much more detail, but I really wanted to do a trade in this account because I had 35,000 in buying power. I just used 15,000 of it for a T-bill. I still have 16,000 in buying power left.
You've got a question.
Yeah.
On T-bills before you move on.
Please. Go ahead.
So when does the interest start accruing? What's the when does the interest start accruing? Issue date? Question mark. I'm not entirely sure what the question is, but it's in the chat.
Yeah, interest starts accruing on the issue date. So let me go back to that. Sorry, I have to find that page. Okay, so back here, when we went into the trade, bonds and CDs, treasuries, 0 to 1 year. And again, we'll have the recording. I know I'm flying right through all this. Go to new issues. The recording will be up. You can kind of pause it as you go through. Okay, so we're back here to where you enter the order. So the auction date is the 9th. That's 2 days from now. So they open up. The announcement is the 7th. I'm going to pop over here and see if you go into this treasurydirect.gov auctions upcoming. It tells you, you just hit the refresh button, and it tells you the 4 and the 8 week are announced. The announcement date is when it starts being available. The auction date is when it's too late to enter your order. These are 2-day order entry periods. You can enter it on the 7th or 8th. And then the auction goes off on the 9th. It settles on the 14th, and the 14th is when you start accruing your interest. Okay. So interest is not actually paid. Yeah, so interest is not actually paid. You buy these things at a discount. Let me show you what that really means. Okay, so here are my accounts, my positions. Okay, here are these 2 T-bills. I bought one of these 3 weeks ago. And I bought the other one also 3 weeks ago. That one was a 1 month and one was a 2 month. Let's click on this and get some details and see what it shows us. Okay. This is the one that matures on the 14th. So this one I bought, and it was a 1 month. And it has a week left. So I'm looking for the purchase price, and unfortunately, I'm not seeing it. So I'm going to do a different little tact here. Okay. When you go here and you look at the auction, you can click on these things. Like here's the 4 week, here's the 8 week that I just bought. Okay, I'm going to click on that. It brings up this page, and it shows you like here's the settlement date. I mean, here's the maturity date. Here's when the thing settles. That's when it starts earning interest. Here's the maturity date. That's when it matures. After the auction goes off, this page will refresh, and it'll give you the result of the auction that just happened. For instance, I'm going to look at last week's 4 week. Here's last week's 4 week T-bill. Okay. It issued today because the auction was last Thursday. It matures in a month, 4 weeks actually, April 4th. The rate, now these are auctions. So people put in, I don't know how much of this detail to go into. They actually auctioned off about $75 billion worth of T-bills in this auction. And people go in and put their order in. We just put our order in at whatever the average allocated rate is. So we automatically get the best rate. Some people with bigger amounts of money have limits on how much money they can invest into these. And sometimes they'll do the automatic amount. And if they want to do more, they basically say, I'll accept a lower rate. And they start pushing in a lower rate to see where they get filled. So in this case, the average, the median rate was 4.51. The low rate was 4.45. And the high rate was 4.59. So we get the high rate, which converts, and that's the discount. So if you took the 15,000 I just bought and discounted it by 4.59%, and then compounded that out, and that'll result in this price, 99.643 per 100. And that equates to a 4.63% rate of return, like if you compared it to a CD or something like that. Okay, the money is withdrawn from your account on the settlement date. Yeah, it is withdrawn on the settlement date unless the money is there, in which case they take it out on Thursday. If you're in an IRA account, you don't want to let your cash and sweep balance go negative. So before you do an order, go to your platform. I'm going to go back to the platform. Okay. And you look here in your cash and sweep number. I have my privacy blocked right now, so apologies. I could uncheck it. I did add $15,000 to this account with a transfer in the last week, so nothing incredibly miraculous happened here other than I put 15,000 in. But I do have that 30-something thousand here. I want to make sure in an IRA account, I actually have enough cash to buy the T-bill, because when it settles on Thursday, they're going to take the money out. And if you don't have the money there, it may create a margin loan at that point. It will not do it in a regular margin account that's not an IRA. A little complicated. I don't want to get into more detail. I want to just move on from there if I can. Let's see, let me get back to this other page. So the mechanics of this are that, for instance, in this account where I have the $66,000 right now, about 10,000 of it, and I'll show you, is in, yeah, I could show you right here. So here's my 112 position. Bobby was just talking about this in his class. It's one that I put on February 8th. Here's the put debit spread part, and here are the two naked puts. Again, Bobby just went into this. I'm not going to go into a lot of detail. This thing currently uses $8,700 worth of buying power. So out of my 66,000, I'm using about 9,000 of it on this trade. This is a trade I do once a month. I did it on the 7th. I mean, the 8th, today's the 7th. We're having a huge down day. So I'm going to go ahead and do another trade today. Again, I had that 30-something thousand, 15,000 I'm putting in here. And I'm about to use another 10 or so thousand to do this trade, which will leave me about 6,000 or 7,000 in margin once it's all done. And again, the purpose is, so I do these trades once a month, and I might get up to 4 of these over the course of 3 or 4 months. I might use up to 3 or 4 of these trades, which are going to take up about $10,000 worth of buying power each. The rest of the cash I'm putting in here just to earn the 4.75 or almost 5%. So if I can, and I'm doing some ifs, but if over the course of a year I have an average of $30,000 in T-bills at an average of roughly 5%, it's a little less, but we'll use 5%. That's $1,500 a year, or about $1,250 a month. $125 per month. $1,500 a year, $125 a month. It's just bonus money on top of whatever these other positions hopefully produce. So it's a great way to enhance the returns that we're doing with our option trades. And it's a great thing to do with any cash in your account that's not being used for a trade or something like that. If you have money in a money market account, check your money market rate. It's going to be a fraction of this 4.75. So you're much better off doing this T-bill thing. A little bit of learning curve, but once you practice it, you're going to greatly enhance your return. It's okay. I'm going to take a minute and do a trade. I have a 112 set up now. And I'm going to bounce to that real quick. Okay, so here's a trade I have kind of set up from before. Let me go to this, make sure it's still current. So I'm setting up the trade in Tasty trade because it's much easier to set up. So this is what I've tentatively set up. I'm going to go in to my account. Yeah, I'll just switch to that one and let you watch. So I'm using that setup from the other screen because I have the strikes filled out already. And this is a little deviation. Bear with me. I'm just trying to show how these things all work together. So we do a 3,800. And again, for those that just did this in Bobby's class, I'm sure you still have a headache from not seeing this before. As he explained, we like to do a 10 wide put debit spread for about 10 points. He's marking at 10.5. Lower the price a little, get it to 10.
Hey, Ed, is that this is the mini? This is the ES, right? Oh, MES is the micro.
Yeah, this is actually, I'm doing it in ES.
Right.
Yeah.
I forgot MES is micro. Okay.
Yeah, MES is micro, ES is the bigger contract, which is 10 times the notional value of the micros. A micro has 50 share equivalent of SPY. And the ES is 500 shares of. Sorry, I'm just reworking these orders now. I know I'm reading them. Bear with me. We'll get this done in a second. And then I'll move on back to the T-bill thing. And I'm sorry, this is more for the benefit of our people in Bobby's Discord who do these type of trades and the the margin and stuff all the time. And I'm just being, as Bobby would say, a greedy capitalist here by working my order a little bit. Frankly, I'm disappointed that it's not filling for me. Oh. Let me go see what just happened. Okay, it all filled. Okay, so I just filled that whole thing. And now I'm going to go back and hopefully show you what that did in my brokerage account itself. Because that trade took up about 10,000 of that 30,000 in buying power that I have. So I want to show that to you in the account itself. You guys seen the brokerage account page or no? I don't think you are. Here we are. Okay. So we're going to go back to my account. We're going to go back to positions. You know what? It's still not showing this thing. All right. Sorry, I'm having issues. It's not great. I'm not thrilled. It should be showing that my buying power just went down. Look, I'm gonna undo this for a second and show you. Okay. Oh, it didn't show it. Well, I'd get fired normally, but since I'm a volunteer, I guess I won't get fired. All right, I'm gonna go back to the seminar. Basically, I've just used up about 25 of the 31,000 that I believe I said I had in buying power in this account. Apologies, let's go back. Okay, so what I've effectively done is I've bought another T-bill. This one matures in a week, this one matures in 5 weeks, and now I have one that matures in 8 weeks. I'm doing the other trade that I just showed you guys. Let's see if it comes up here.
It will not show you your futures positions on the website.
It won't? Okay, thank you. I appreciate you doing that, so I won't keep banging my head against it. Basically, I'm scheduling out my T-bill maturities for when I expect to put on another one of these trades, which is once a month. So I just did my second trade. I did my first one about a month ago, and I might do up to 2 more, using up to about $40,000 in buying power, my roughly $70,000 in buying power. The rest of the money I'm putting in T-bills so that the positions I'm entering, these 111, 112 things, hopefully they're going to generate money. In the meantime, the extra cash that I have in the account is going to be earning this 4.75 or whatever the T-bill generates at auction. And then the 2 compound to get our total annual return. Back to the T-bill thing. I'm just glancing at the questions. Y'all bear with me for a sec. Okay, no new questions. So we can go in a little bit on when these things, so the 4 and 8 week, and I went over this some already, I'm going to go over it again here. The auction takes place, they open up on a Tuesday and Wednesday. See, they're announced on Tuesday, they're auctioned on Thursday, and they're issued the following Tuesday or a week from, say, today. The 13 and 16 week T-bills are actually auctioned on Thursday. Thursday it opens, and it's open Thursday and Friday, and then they're auctioned Monday, and then they settle Thursday after the auction. And we like to keep our rates shorter term because, as I mentioned earlier, when interest rates go up, existing bond prices go down and vice versa. So the longer you go out in maturity, the more the principal moves when interest rates move. It doesn't move very much on these very short-term maturities because you're scheduled to get your money back in these very short terms. So the price doesn't move much. So you have very little, if any, principal risk. And if you hold it till it matures for the full face value in 1, 2, 3, 6 months, whatever you choose, you get the full value back at that time. It is, T-bills are issued and guaranteed by the United States government. The full faith and credit are behind Treasury bills, Treasury notes, and Treasury bonds. We all hear a lot about the debt limit and extending the debt limit and raising the debt limit, etc. And basically the government needs to raise the debt limit because when they set a debt limit of whatever amount and they spend that money and go up to it, they can't technically pay things like Social Security, Medicare benefits, interest on the government debt, etc. So that's why it's so important for Congress to extend the debt limits when we reach them. Some countries have done away with their debt limit completely, allowing the government to just continue piling into more debt without any additional checks and balances, which is not a great thing. My point here is to let you know that these T-bills issued by the US government are literally the safest thing that you can put paper money into on the planet. There aren't higher quality government issued securities at this point in time. There are comparable ones, like the Swiss system is a AAA rated debt, but they don't have much because Switzerland's a tiny country. Japan probably is a AAA rated credit. And again, they just don't issue a ton of debt. And I won't go into a lot of details, but the Japanese government, like you hear our government doing quantitative easing and tightening in the marketplace, that's basically them buying and selling bonds in the existing marketplace and either injecting or withdrawing cash. My understanding of Japanese government is they own almost all of Japanese government debt outstanding. So it's kind of crazy how things have gotten very stretched in the world. So it kind of might sound risky. Everything is risky, but in the scale of risk, T-bills are like zero risk. So this is not something you're going to click a button and say, oh my God, I just lost X%. You really almost can't lose money. If you bought a T-bill at auction today and you had to sell it tomorrow, you might take a tiny, a couple of pennies per $100 of penalty on it. It's very minimal. Sorry, look, I'm going to pause and ask some more questions. We had, and while I'm waiting for those to pop up, we did have a couple of questions posted in the chat where I posted this originally. Let me go find those. And again, I'd welcome any questions you have. Feel free to just click the button and ask out loud. That would be great as well. Just bear with me while I filter back to where these questions were asked. Okay, so someone in our Discord asked, what's the buying power effect when combined with other futures strategies? So in a futures account where we only have futures and futures options, when you enter an option trade or you enter a futures trade, it sets aside a certain amount of buying power requirement for that initial trade. It can go up. Rarely it can go down, but it does go down sometimes if you're in it for a while and the price moves away from your entry level, but pretty technical. These things, basically your buying power or needed margin, if you will, when you enter one of these things is set by the exchange and further set by the brokerage company you do business with. The brokerage may be more restrictive on buying power use than the exchange itself. And so when you enter a trade, just like I did on that 112, I showed you my existing one used up 8,700. I looked beforehand, this brand new one uses a little over 10,000. Those are the amounts of money that are taken out and held aside as reserve or margin against those positions because they wiggle around on us while we're in those positions. And it's the money that's not being used for buying power that's available for use for these T-bills. Before rates went up, like a year and a half ago, or really just a year ago, these 1 month T-bills, instead of being at 4.75, were at like 0.1%, 0.1 before the Fed started raising rates. It was actually a little lower than that. And so there wasn't really any incentive to go out and earn 0.1. And at the time, our brokerage accounts are probably paying us 0.01, the least they can actually pay. Now these rates have gone way up because the Fed has been jacking rates up via Fed funds. And as the Fed raises the Fed funds rate, it tends to lift rates across the entire yield curve, with most of the emphasis being in the shorter term, because the Fed funds rate is an overnight lending rate set by the Fed, where banks borrow from each other to settle out whatever cash shortfalls they may have. So they'll borrow in the overnight. If they don't have enough deposits on hand to cover their reserve requirements as a bank, they are required to go out into the Fed funds market and purchase Fed funds or dollars, if you will, at whatever the Fed funds rate. Currently, it's 4.5 to 4 3/4. It's a range. And they pay that rate, it's an annualized rate, and they pay it on an overnight basis for however long they borrow the money. Because of that, because the Fed has been jacking rates up, we as investors get to participate in the rise in interest rates here. And really, we have not seen rates like this since pre-2008. In 2008, we had the Great Recession where real estate blew up, securitized loans blew up, the market then blew up, and central banks around the world squished rates down to zero pretty fast. And they made a couple of attempts in the last 14 years to raise rates. And we'll just say met with market resistance. One of those periods was in late 2018 when the Fed tried to raise rates. And if you look at a chart of 2018, you'll see that the market was going up, 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 and then all of a sudden it just crashed. And it crashed right when the Fed was doing a bunch of rate hikes. And then the market crashed, the Fed got chicken and lowered rates again, and the market basically recovered. Then COVID came along, and then that resulted in the federal government, not only ours, not only our central bank, but all those around the world, to again squish rates down to zero. So during COVID, as you're all aware, there was a lot of meme stock activity, highly speculative little cheapy bankrupt companies and penny stocks going crazy. It was all kind of crazy speculation. There was speculation in the commodity markets. There was speculation in the market itself. All of the liquidity that the government was pumping in, basically fueled a giant speculation in everything. And the zero interest rate policy drove mortgage rates down, which drove housing prices through the roof because one, housing demand goes up when rates go down, and they went way down. And then two, because of COVID, there was very little actual building going on. So the supply was crimped during that period. So you had a huge escalation in demand and a drop off in supply. And that's a basic economic formula for rising prices. Okay, let's see. Let me look for questions. So I'm not just going on an economic rant here. Seems that either TV or the government is taking a percentage of the proceeds with the delay of days, as Dwayne mentioned. So yes and no to you guys on that. So in a regular portfolio margin or a regular margin account, you can actually buy the T-bill on today. You order it today or tomorrow. It auctions Tuesday. And whether you have the money in the account Tuesday or not, in a margin account or a portfolio margin account, they do not care. If I have 10,000 in there and I buy $20,000 worth of T-bills, it's going to show a negative cash balance on Thursday once the auction happens. And then on Tuesday, as long as I have the extra 10,000 in the account on Tuesday, I do not incur a margin loan. It's just how margin and portfolio margins work. And it's just like a stock. If you bought a stock today, let's say you had $10,000 in an account and you bought $20,000 worth of stock. You've got 2 trading days to get that extra 10,000 into the account, or they're going to start charging you margin interest. This is basically exactly the same thing. So in a margin or portfolio margin account, if you have a T-bill maturing Tuesday, you can actually, next Tuesday, you can actually place your order today to be settled. We'll go back to the screen. We'll look at the 4-week. You can put your order in today or tomorrow. Here's the announcement date. So it's the auction opens on the announcement date. The 7th and the 8th is the auction date. The order date. The 9th is the auction date. And the settlement is the 14th. If you're in a marginal portfolio margin account, they'll take your money out here. And they'll put your T-bill in here. But they don't actually charge you interest for taking the money out if you have a shortfall. And you don't start earning the interest until it actually gets issued on the 14th. So what I'm trying to say is if you have an existing account with a T-bill in it, like I do, this one that matures in 7 days, if it was in a regular account, I could place the order today, the auction would go off Thursday, it settles next Tuesday, and I don't lose 1 minute of interest. In a Roth IRA or any kind of IRA, because the rules are different, there isn't really margin in an IRA account. They don't, according to what Ameritrade just told me before the session, they do not allow you to, I guess, coast from Thursday when the auction goes off until Tuesday when it's settled. They'll actually pull the money on Thursday and if that creates a negative balance in your account, you will be charged margin interest for those few days until it settles. And the other T-bill matures on Tuesday. Redeeming the old one and using it to settle this one, the new one. So
Wait, did you just say they are gonna charge you interest?
they are all in an IRA. They will, if you buy one ahead of time. Like, let me go back here.
Right, so if you have some expiring on the 14th, which the new
Yeah.
ones are being issued on the 14th that you buy today, you'll have to pay interest.
Or wait. So in my regular account, I would buy a T-bill today for next Tuesday. It would settle and it didn't matter. As long as the money was there next Tuesday, I wouldn't get charged interest. In this account, this IRA account that I'm dealing with, this T-bill, the 1 month one, the first one that I did, matured next Tuesday. I am not putting in an order for that T-bill until next Tuesday. And it won't auction until next Thursday, and it won't settle until a week from next Tuesday or 2 weeks from today. So I will go 1 week earning no interest on that piece of T-bill. It's less than perfect, but I'm still earning the 4.75 while the money's in there. I'm earning way under 0.5% if I don't do it. So even though I may have a little week of gap here and there in that earning power, I'm still effectively earning over 4 percentage points more than if I just do nothing at all. Does that make sense?
I wonder if it's better to buy it on the secondary market there.
It's not better to buy it on the secondary market. So,
Well, if you get extra week of interest,
well, you do, but let me show you something else. So
right? Because the next week, if you buy it next week, it's gonna be issued on the 21st. And it won't be mature for
Yeah,
4
you know,
weeks later.
I see what you're saying, and I guess we'd have to do the math to see what that 1 week of loss is going to result in. But if we earn, just thinking out loud, so if we put it in a 1 month or a 4 week and it settles next Tuesday and it matures a month from next Tuesday, and we have to wait 1 week, and then we can do it, the order the day it matures, but it's going to take a week to get back into a T-bill and start earning that 4.75 again. And for that 1 week, it's going to be earning the 0.3 or 0.4, whatever our brokerage account pays.
Here's how you can tell, I guess. I mean, you don't know for sure, but so the ones that are being issued next week will mature on April 4th, right?
Yeah, let's see what that date was. May 9th. Oh, no, that's a 2 month. Sorry. Here, we'll go back. Upcoming auctions, 4 week. Okay, so the 4 week one will mature on April 11th.
So what was the March expiration date?
April 11th?
Yeah, if you enter an order,
Oh, yes, right.
the auction,
April 11th.
the auction is next Tuesday, the 14th. And it matures 4 weeks later, which is April 11th. It's not actually 1 month. It's actually 4 and 8 weeks, which, 8 weeks is 28 days versus a full month. So that's why this little thing.
So what was the March maturity date? You can tell by the gap in the days, pretty much. So if anybody knows, that would be helpful. And you can see how many days you're losing.
Can you say that part again?
If you just check your expirations of your maturity dates of the months, that's all you care about is the difference between the maturity date of March and the maturity date of April or May or the next however many months as you go.
Well, remember,
Right,
when
it'll be 7 days.
when it matures next on the 14th, like the one that I have that matures in 7 days, when it matures on the 14th, I'm no longer earning the 4.75. It goes immediately into my brokerage account, and whatever the broker rate is that they're paying is what I'm earning until I redeploy that rate either in another treasury bill or a trade or whatever. Because I would roll this right back into another 4 or 8 week, I'm going to have 1 week from March 14th. On next Tuesday, the 14th, I will enter an order for 15,000 from the one that's maturing on the 14th. The auction will take place next Thursday, and it will start earning money on the 21st. Okay, I'm showing you the one that auctions this week. This is the one that auctions this week. I'm going to be doing one that instead of the auction date, March 9th, it's going to be March 16th, which is next Thursday. Okay, so on that basis, if I buy a 1 month T-bill, I'm earning the 4.75 for a month. Yes, I have to wait a few days for it to actually get in the T-bill before it starts earning interest. In an IRA account, I have to wait to redeploy the money until the money is actually back in my account if I don't have other cash to use. And then I have a week gap. So I'm earning interest. I place my order today. I have a 1 week delay where I'm earning the broker rate of 0.3 or whatever. In a month from now, it matures. And for 1 week, I earn the 0.3 again. And then that new purchase that I make in a month, in a month, will settle in a month and a week. And then I'll have a whole 4 weeks of earning interest again. So basically out of 4 weeks and 4 weeks plus 1 week is 9 weeks. Out of those 9 weeks, I'm going to be earning 4.75 for 8 of those and only 0.3 or whatever for the 1 week. Does that kind of make sense? And look, this is great analysis. The big picture is you're earning 4.75 with some button clicks and a little effort versus the 0.3 or 0.4 if you just do nothing. So maybe you lose the 4.75 here and there while you earn their crappy rate, but it's better than earning their crappy rate all the time, if that makes sense. I hope it does.
Hey, could you go over how to sell the treasury if you wanted to get rid of it?
Yeah, I sure can. So you go
While
over
you're-
here.
While you're looking for that, to pull it up, my thought is it might be better to do 2 months, just because it's going to be less admin work and it's going to be less of the gaps.
Yeah, and that honestly is one reason I like doing the 4 and 8 week, because I always have one maturing within a month, and then I always have one maturing after that. And that's why, because I had one, this one matures in a week on the 14th. This one matures in 5 weeks on April 11th. The one I just bought the one I just bought was the 56 day. It's going to mature on May 9th. So yeah, I don't have to worry about it for 2 months. If I need money in the meantime, I have a few thousand in buying power that I'm not using. I'm keeping this kind of tight. In other words, I'm investing as much in T-bills as I possibly can while I can. And if I need the money beforehand, because I'm just doing one of these trades a month, if I space my T-bills out by the month, I shouldn't need the money again for a month when I'm ready to do that other trade. If the market pulls back and makes my margin needs go up, as you in the Discord are well aware, and you in Bobby's class just kind of recently found out, you either have cash set aside to cover that margin expansion, or you have to go in and sell part or all of a T-bill to get that liquidity. So because I just bought another 15,000, I'm gonna have 45,000 in T-bills out of my 66. So that leaves me 21,000. That trade I had on uses 9. So, that leaves me what, 12,000 or so? And then the brand new trade I just put on uses 10. So I'm only gonna have $2,000 of cash left to cover any kind of margin expansion, which is kind of tight. Now, the last question that was just asked is super relevant at this point, because what happens if the market goes against me and it pulls the buying power out and I need not just the 2,000 in cash that I have, but maybe I need 5,000 more? What am I going to do? The broker's going to say, you got a margin call. No need to panic. I have a margin call because my account is stuffed with T-bills. So what I would do is I would go to the nearest expiration, which is the one that matures next Tuesday. I would click on it. And in that example, I need 5,000. So I have 15,000 in here. Because I said so back here. Let me go back to that again. Ugh.
Yeah, for people that are worried about losing the interest for that week's time, you can just go on the open market and buy them. So like a 4-week
You can,
right now
yeah.
is at 4.32.
Okay,
That's what I just said.
and that's great. Now, y'all don't.
That
let
makes sense to me
I'm gonna
too.
I'm gonna go back to that in a second. Let me execute on how to do this. So you saw where I had 15,000 of it. If I need 5, because that's what they told me, I'm short 2,000. I'm just going to sell 5. You just go in here and remember it's per bond. So I need 5. I just type 5 in here, meaning I want to sell 5 of these 15,000. You calculate total cost. And this is where they tell you basically what you're going to get. Okay, I'm going to get about 99.95 cents per 100. Okay, which means I'm basically giving up 5.2 cents per 100 to get out of this thing. And then it offers you a price. So you choose one of these, but that's kind of technical. This is if you have bigger, like this is someone willing to buy 1 million of these. I just have 5,000 to sell, so I can use this one. I'm going to calculate the total cost. This is where it tells me, Ed, this is what you're about to get. You're about to get 99.948 cents per 100, $99.95 roughly per 100. I'm going to get 4,997.40 cents out of 5,000. I'm only losing $2.60 by redeeming this a week early. And then you just do sell, you click sell. So I'm not going to click sell because I don't want to do it. But when you click sell and you hit the refresh button, by the time you can hit the refresh button, this position will be gone. You can go into your account and it will immediately show up here in your cash and sweep vehicle number. And it'll also be removed from here. Instead of being 15, it'll show 10. So that'll adjust pretty quickly. It's virtually instantaneous. So if you get a margin call, here's my big advice. If you get a margin call, don't panic, because you've gotten a margin call because your positions have gone against you. These ES and the micros and whatever options you may be selling, the market has gone against you and these positions are going against you. And the margin requirement is going up. There's nothing going on with the T-bills that are causing the trouble. Your account positions are causing the trouble. So if your only position is you did an ed where you put 45,000 in your $65,000 account and you just overstuffed and margin backed up on you a little bit, you just go in and sell a little T-bill and that's the end of it. It'll replenish the cash, the margin call goes away, end of story. If the market is blowing up, like if you wake up and the market's down 5% and you're getting a margin call, go deal with your positions first. Like figure out, do you want to roll your positions? Do you want to short a future? We talk about these things in the Discord. How do you want to defend your positions in a market downturn? What I'm saying is, if you get a margin call and it's because the market's going kaflooey, go deal with your positions first, and then go sell your little piece of T-bill, because the T-bill action is going to take you 5 minutes to do. It's not going to take you any time at all. So put the fire out and then go make your T-bill adjustment afterwards, if that makes sense. Let's see.
Hey, Ed, it also
Yeah.
seems like laddering these in and it would give you something expiring every week. So you could do like a 2 months, like
Yeah. So
8 weeks of,
mhm.
8 weeks of them spread out so that every single week you have something expiring. And that way you don't have to worry about losing the finish.
Yeah, Tony, that's great. And if you're, I'm sorry, I don't recognize you right off, but I'm guessing you're in our Discord. So you watching Bobby shows, you see Bobby with all his little list of T-bills, and he does them weekly.
I'm a newbie, so I just joined like a week ago, but
That's
yes.
fine. And I have a 2-month T-bill ladder. For you being brand new, as you build out your position, like let's say you've got 50,000 in your account and you're doing micros and you're building the little micro positions one every couple of days and da. You've used 10% of your buying power. So you've used 5,000 up, and you anticipate going up to like 20% buying power. That would be 10%. I mean, 20% of your 50,000, which is 10 grand. That's about how much buying power you're going to use. If you want your buying power to go up to 20% max, that leaves 80% of your account free, sitting in cash, sitting in the brokerage money market account, earning whatever the broker generously wants to pay you. Joke, because it's like 0.4 or something. I haven't looked. It was 0.3 a few weeks ago. And you're missing out on all that money. So if you if you think you're going to need a maximum of 20 out of 50 of your account for buying power purposes, you could take the remaining 30,000 that's left. And as a beginner, I would say take 20 of that, leave 10 in cash for your margin expansion. Take the 20 and put it in T-bills. You can put it all in the 4-week T-bill. And and if you're not in an IRA, you buy the T-bill, it settles next Tuesday. 3 weeks later, you buy another T-bill, which will settle a week after that. And these things will literally roll and mature and be settled by the maturing one. You'll never miss a day of interest. It's super clean and easy. And again, over the course of a year, if you just invest the 20,000 at roughly 5%, you're making an extra $1,000 a year just by learning to click the buttons and do what we did today. 1,000 on your 20. Now, if you got a multi-$100,000 account, these numbers magnify tremendously. And what I mean is, like, let's say you have a $500,000 account and you never go over $100,000 worth of buying power at worst, okay? You've got $400,000 is just sitting there that the broker is paying you point whatever, and they're taking your $400,000 and they're loaning it out to customers who are incurring margin loans at 12 or 13%. And then if they have money left over, they're going out and buying the 1-month treasury bill and earning the 4.75 and paying you 0.3 or 0.4 on it. They're making the spread. They operate just like a bank. So how can brokerages make money when commissions are zero? They make them off the spread, like we just described. They make them in various ways. Mutual funds that they hold, their trailers that get paid. There's all kind of hidden, subtle ways that brokerages make money besides commission. One of them is on our cash. I'm on a one-man mission to make sure as many people don't let the man use their cash, but we use our cash for ourselves. So I create my own brokerage, my own little T-bill account. And my other one over here, and look, I'll show you, that's what I got. These are all T-bills. This is Ed's 100% government-backed money market fund. So I basically made my own money market fund by buying all these different T-bills. Now these T-bills ladder differently. Here, I'll go in my account and show you. We'll go in this floor. Let's go all the way. Now we're gonna get a little technical. Okay, now I know you're like, holy crap, dude, it's technical enough already. I look at this is the FOMC schedule. Okay, so here I'll cut and paste this into the room as well. You don't have to do this. This is me being like cuckoo. I mean, I'm 62. I had a Series 7 broker's license back in 1987. I used to be huge in fixed income before rates plunged. I kind of have a niche little knowledge of all this stuff. So When you hear Bobby saying, Ed brought this, yeah, I brought it, but it wasn't really a fresh discovery. It was the fact that rates had been low for 13 or 14 years, and now they're not anymore. So here's a page. Again, I just clipped and pasted the page in there. This shows the FOMC meeting schedule for 2023. It also shows past ones, but who cares? So we just had one in January and February. On February 1st, they made their announcement. They raised a quarter. The next meeting is the 21st and 22nd of March. They always make the announcement on the second day. They tell you what they're going to do with interest rate policy on the second day, okay? And it's a Wednesday. I think it's always on a Wednesday, if I'm not mistaken. And so what I do is I actually try to extend my T-bill maturities, not by the week, and week is great. Do the week, that's fine, that's no problem. Do it by the week. I do it monthly, like 4/18. Okay, that's the one. I'm not sure why this is. It should be this one first. Look, let me start by maturity date. Okay, here we go. So I have one that matures on the 23rd of this month. I have one that matures on the 6th, one that matures on the 18th, one that matures May 11th, the 25th, June 22nd, etc. And I try to match these up to the Fed's meeting schedule as much as possible. So I can have money that comes up either right before or right after, so that whatever the Fed does, I can decide what I want to do right then and there. So there are different ways to do a T-bill ladder. This is a pretty sophisticated one because I've really gone out. I started at a 1 and 2 month. And then as I got into it and got more and more comfortable, I started adding more. And now I have them spread out by month. And you can see, like, I have one that matures at, they mature every couple of weeks, every couple of weeks. And then they start maturing about once a month, and then 2 months and a month after that. I'll go back in and fill in this gap where I have nothing in July. When this one matures here on March 23rd, I will very likely go in and fill something into that space just to get one maturing in. So I kind of like mine laddered out. Now you're like, dude, why are you going to all that trouble? Well, this is why, okay? This is why. I can earn 4 3/4% if I just do a 1 month. And look, doing the 1 month is easy. 1 month, 1 month, 1 month. You only have one T-bill. If you need some, you go and sell a piece of it. Otherwise, you just keep renewing it, renew. But you can see, if you look at this schedule, that rates are at 4.75, and at 6 months, they go up to 5.22. Well, in fact, this is probably refreshed. Here, let me refresh it. Yeah, look, see, the 7th just popped up. We were looking at the 6th at 4.75. This is today's rate. This thing updates at around 2:30 Central every day. So now the 1 month or the 4-week rate is 488. The 2 month is 488. Out to 6 months is 532. So I could just be doing a 1 month, 1 month, 1 month, 1 month, 1 month, and earning that 4.8 or whatever this rate is at the given time. You see, this is what it was a week ago. This is what it is now. Or because I have this ladder set up, like when this one matures, I've got another one that's maturing in 2 weeks, and another one that matures in 2 weeks after that. I don't need a 1 month T-bill. I already got a bunch maturing, so I can push that maturing one way out. So that, and right now I'm going out 6 months, because 532 minus 480 is 0.52. I can earn 0.5% more just by going out 6 months instead of 1. Now it's only 0.5%, but if I keep doing it, like every time a 1 month matures, I roll it out to a 6 month, and then a week or two later, one matures and I roll it out to 6 months. Every time I do a roll out to 6 months, I'm earning 0.5% on that chunk of money. And as you can see, these are $50,000 chunks. So 0.5% on 50,000 is $250 a year. So that's $20-ish, $22 a month just on this one. And if I have 7 or 8 of these, sorry, excuse my little dog. If I have 7 or 8 of these, I mean, like, right now I have 8. I typically have 7 on. I just jammed another one in because I know this one's maturing soon. And if I need the money, I'll sell part of it soon. Again, kind of a sophisticated way to complicate something easy, but I'm just trying to maximize the dollars that are earning the 5.32. So this is called a T-bill ladder, or if these were CDs, it would be a CD ladder, where you do short term and then you do longer term. That's what a ladder is. You're actually laddering in over the different maturities so that when you buy a fresh one, you don't buy the 1 month, you buy a 6 month, because the 6 month pays you more than the 1 month. We may get in a situation down the road, we will, where the Fed is still raising rates and the market is anticipating the Fed lowering rates so much, the 1 month might actually end up being the highest rate at some point. At that point, I don't want to go out 6 months and earn an inferior rate. I'll just keep rolling it all in 1 month. Does that make sense?
Yeah, so you just go out to the highest rate, basically, right?
The
Or-
highest rate as far out as you personally are comfortable with. And by that, I mean, like, look, here's the 2-year rate at 5%. Do I want to lock up my money for 2 years at 5%? Not really, because our inflation rate's still more than 5%. So although 5% looks pretty juicy, if you adjust it for inflation, I'm actually losing money in that 2-year T-bill. Okay, so I don't want to go out, and then the further out you go, as interest rates wiggle, the more these prices will go against you as you go further out in time. So the only way I want to go out to like a 1 year, or 2 year, or 3 year, or 5 year is if these rates are so high that I'm like, I will keep that. I'm happy with, if I can get 5.25 or 5, if I get 6% on a 2 year, I'm making up a number. I don't know what my magic number is, but I'm guessing if this rate hits 6%, I'm probably going to take a piece of this big old chunk. I might take 100 or 150,000 of it and put it in a 2 year. And I can still use roughly 99% of that for margin purposes for our futures and options trades. That luxury doesn't go away. What I'm saying is the only right way I want to go out further in time is if I think the Fed's almost done raising rates, and the further out in time rate is a rate I don't mind holding for the whole length of the term. I don't want to buy a 10-year bond at 4% if I'm not happy holding the 10-year bond at 4%. I'll stop. I don't want to go into too much nuance on T-bills and rate movement and treasuries and all that, but I am happy to answer more questions if you have those on that, either here or after in the Discord or whatever. What else do you guys have for me? Okay, can I ask this? Anyone who's in my prior session, is there anything I covered there that I haven't covered here in enough detail to make you feel comfortable? Or is there anything I need to repeat? This is all very technical. It's, you know, you guys in Bobby's class, like when he shot that bazooka at y'all today, here's a 1-1-1 or a 1-1-2, and you're like, oh my God, maybe I shouldn't have taken this class. You know, like it's this kind, you might be having that feeling now. The difference is you literally almost can't screw this thing up. If you buy 1 or 2 month and you buy too much, you just go in and click the button and sell it. I had to sell 15,000 of a $50,000 piece a few months ago, and it cost me $2.20 to get out. $2.20. So am I worried about the 220? No. Am I worried about a tiny little principal decline because rates have moved against me? No, because I'm earning 4.75 instead of 0.3 or 0.4. After a week, I almost can't lose on it no matter what, because I've already earned in a week way more than I'll earn in a month at the rate that the broker's paying me. Again, it's a lot of words. I'm not expecting everyone to take all of this in now. You do have the recording. You can go back on the recording. Y'all all have my access in the Discord. You guys in Bobby's class, I cannot urge you enough to join Bobby's Discord. He's going to let you in for free. I'm guessing he's probably going to give you full-blown access that other people are paying money for, at least temporarily. And I wouldn't be shocked if he gave you some kind of full access forever as one of his students. Go in there. And if you don't understand a thing you're reading, just stay in there anyway. And at some point along your life, you're going to find the information flowing in there very, very handy. And in Bobby's Discord here, let me go into that for a minute. And I'll just show you that in case some of you are not in there now. Okay. So, oops, it didn't go, did it? Okay.
Hey, Ed, really quick.
Yeah.
I'm just figuring out there is a $25 fee, I guess, huh, to buy these.
Yeah. So, and thank you. We didn't go into the secondary market. The auction market is available at Ameritrade. It's available at other brokers, but not all of them. Some brokers don't have an auction access at all. Some brokers, like IBKR, Interactive Brokers, they, I think, only have access to the secondary market. Can someone confirm that for me? In which case you have, and they have a $5 ticket charge. So it's a $5 commission to buy your T-bill. Not too bad. As someone mentioned, like, well, I can go in and I can buy a 4.3 without waiting. Well, 4.3 is less in the secondary market than the auction or primary market at 4.75. You're giving up almost 0.5% to use the secondary market, and you're paying a $5 commission versus 0, which makes a tiny difference in the yield you're earning. At Tasty Trade, which is the old Tasty Works, they just renamed themselves, they have a $25 ticket charge for T-bill purchases. And I think they're only the secondary market as well. So clearly some brokerages are much more T-bill friendly than others. And okay, so here's Bobby's Discord. Here's his room. It's the Trader Nerds. Here are all the great, incredible rooms where we have stuff going. Here's my room, Notional Ed's Journey. Here's some stuff that I post from time to time. Every room has a pin. You see this pin? Once you guys get, and for you new members who may not know this, let's consider this a brief tutorial. You can go in any and every room, there's this pin thing, and you click on the pin, and either I or another moderator or Bobby has pinned something in these rooms. And it's usually something we find handy. Like, here's that FedWatch tool. This is actually showing a percentage of what the Fed's going to do. I can show you that in a minute. Here's a super cool video that I really liked. Best of Futures Content 2022 with Anton Kulikov. An amazing video. Y'all go watch that for sure. And then I have other things in here, like here's the life cycle of a put debit spread. So I show when you put it on, I give some examples, and this is what happens to it over time, and I'm explaining all that, so that's in there. Here's some T-bill stuff. Here's my old T-bill seminar. Here's some stuff on managing a put debit spread. Okay, in the 111, you have a naked put and a put debit spread. How do you manage the put debit spread? These are my thoughts. Here's some different trades. We have a BA 112 and a structure. These are hedge type trades. You can read about that there in my thoughts. More. Here's some other things. Here's a handy thing. This shows based on the VIX being at certain levels. This is the buying power that you should use. Let me see if I can cut and paste this in here.
Yeah.
Yeah.
TD Ameritrade doesn't have a ticket charge, do they? I don't think so.
No, but they do on the secondary market. They don't have a ticket charge, but there is a commission, but it might be so tiny that it doesn't matter.
I haven't seen any when I bought them on the market. I don't see any. They just have, it's just the price that's on the
Yeah, it's built into the price.
Exactly, Hal. And what they're doing is they're taking that price and they're marking it up a couple pennies. And so if it comes to them at 99.95, they may sell it to you at 99.96 and make a penny per bond. For instance, there's not a lot of margin in these in the short term. If you go out to a 5 or 10 or longer term, unfortunately, bonds are still an area that is the wild, wild west. And bond salespeople can charge you a commission. They can mark up the price of the bond, or they can do both. I mean, you really have to look at what you're doing, unless you're buying a 1, 2, 3, 4, 5, or 6 month treasury where there's not a lot of markup to be done. So,
Hey, Ed, I had an idea too, and Tasty.
sure.
I'm just doing, I'm doing TLT. I'm doing a wheel on a TLT.
Okay.
In other words, I'm looking at how much my bond would pay me, if I had $10,000, let's say in the bond. I look for how much that is, and it's $8 a day. I don't know if you guys figured that out yet, but it's about $8 a day, I believe.
Okay.
Math on that. So it's kind of like your what do you call it on the option, the theta? So
Mhm.
I'm just looking to get theta that's, around that or more, you know what I mean? Something around that kind of replaces it. And so you can go quite a ways out and down away from the price on TLT and sell a put down there. And
That's fine as a relatively sophisticated replacement.
but I mean, you can do it instead of
TLT
$25 charge, you know what I mean?
So,
It's
so
way to-
TLT is an exchange traded fund that's 20-year bonds, if I'm not mistaken. That mimics a 20-year bond maturity.
Yeah, it's a 20-year bond.
And so what you're doing is great, but it's kind of a hybrid between one of our regular 111, 112s and SPY or SPX or ES or the micros, and a flat out T-bill purchase. Like, you're taking some market risk by doing it as a 111. You're just doing it in a fixed income investment versus an equity index, if that makes sense. There are other things, and see, the beauty of the T-bill is it gives you this margin relief. Like at Ameritrade, they hold 1%, and the other 99% you can go use against margin. Your margin needs for your trades. At Tasty, it's 6%, so you have 94% relief to use. Other things like a regular money market account give you zero relief. A CD does not give you, I don't think, it doesn't give you the same relief, and I don't think it gives you relief at all, other than regular margin relief. Maybe you get 50% that you could use. There are other things that, like, here's one, XONE, I think is the symbol. I just saw this on TV yesterday. It's the Bloomberg 1-year T-bill ETF. And I don't know what the yield is. I'm not saying go buy it, but if you find yourself in a situation of, I can't do that, but I don't want to earn 0.4, there's some very short-term alternatives that don't give you the margin relief, but they do allow you to earn some money in the meantime. Let me see if I can find another one. There are a couple others I used to watch before I started doing this. I'm sorry, I can't find them too quickly. Nope, can't find them. But there are some alternatives that mimic a decent rate of return. None of it is going to match the T-bill dynamic. And historically, CDs have paid more than treasuries because typically banks have a need for money. And so they'll pay more than the treasuries are paying just to jump in front of the treasury market, which has its own borrowing needs. As you saw earlier, like this I think it was a 4-week auction, is going to be like $71 billion that the Fed has. A lot of the deficit financing that they do is in the shorter term maturities, and they just keep rolling it and rolling it and rolling those maturities to finance their debt. Okay, back to this. We're in the Discord. This is Bobby's Trader Nerds Discord. Down in the bottom left, okay, here's the top right, all the way down in the bottom left is this fixed income section. In here, we have treasuries, where there's some general commentary that we have going. There's a few things pinned in here, questions and answers. The better section is here, the strategies, where I've pinned a lot of stuff. Go in here, most of the things I posted and talked about today are pinned in here with some additional information that you're welcome to scan through. Like, here's some info on laddering, and what the philosophy is of laddering. And so, you existing members, go read this. It's not going to take you much time, and it'll really help solidify everything I'm talking about today. For the new people, go do that. For body students, go take them up on it. I mean, like, there's a ton of fixed income information here. There's some charting stuff here. There are a whole bunch of individual people like me who have their own little rooms that are promoting their own little pieces of content, which might be trades, analysis of trades. A couple of these have investing services that they kind of promote through here. There's some stuff on hedging. There's stuff on option trading, the 111 that Bobby mentioned, et cetera. Some stuff on zero DTE. There's stuff on strangles and commodities. This Bitman trade is a different kind of trade. Here's a double dot. There's all kinds of, you cannot possibly consume all this quickly. It's just going to be like an avalanche of information. But if you found this interesting and you're a little confused, go into the Discord and read what we have pinned down here in these fixed income sections. I have something on I bonds too, which gives a lot of primary information on I bonds and how they work. So a bunch of content there. Y'all please go consume that. Let's see here. What else?
Yeah, been super valuable, I have to say. I mean, it's a fire hose, but it's a good one. You know what I mean?
It is a fire hose, Tony, and it's always a fire hose. And you said you just joined. So this is like a dam of information breaking right in front of you.
Yeah.
Probably already trying to swim with all the 11X stuff going on. So it's
Well, I understand that the option stuff's pretty, for me personally, the option stuff is pretty easy to understand, but this treasury stuff is just like a black hole. I didn't understand any of it. So I really appreciate the great overview of everything.
Well, you're super welcome. Again, if you said you were new, so this session was a little more free-handed than my other one. I went into more detail on other things in the other session. So go view the other session. It's an hour and 4 minutes long. Make a list of questions, Tony. And then if you need to review this one, review it. And then ping me in the Discord. Just look for Notional Ed, click my name. It'll bring you a private message. And you can just, if someone has a private question, they want to ask me, Ed, I have 150,000 in my account and I use 30,000 of it. What do I do? I'll confidentially help you and the world doesn't have to see it. If you have a generic question, just do an @NotionalEd, just type @Notional and it'll bring up me and you just highlight it. Send it to me from my room, send it to me from the fixed income area, send it to me from wherever you are, and I'll see it and I'll go get your question and respond to it. And
Awesome.
I'm super happy to do that. I mean, my mission here, frankly, is I don't like the man. So if I can take the man's money, my money, and not let the man use it, I don't want the man using my few $100,000. Y'all saw the T-bills I had jammed in that account. I'm not letting the man make the float on all that money. I'm going to make the money. So there's number one. I don't want the man making my money. The man already takes enough of my money in taxes and commission. And I'm not one of these anti-society people. I'm a little disenchanted, but whatever. I just don't like the man to take advantage of me and my money. And that's what's happening right now. So part one is I don't want to get screwed. I want to be the one earning the spread. I don't want my brokerage account to do it. So that's part one. Part two is if I can earn 5% on my account and I want to earn 15% in my trading account, and I'm trying to figure out how, I know I can earn 5 of that 15% right now in T-bills. So now I only have to trade for 10%, which is a lot less risky than trading for 15%. So I hope that makes money. In other words, a boatload of your If you want 20%, which is a pretty low, and people shoot for higher, but 20 is high. If you research great traders and hedge fund managers that have done it over decades, there aren't more than 2 handfuls of people that have gone more than 20% for a 20-year period. It's just not really consistently done. So if you're able to make 15% trading the 111 or the 112, and you make 5% on your T-bills because you have all this extra buying power because you don't really need it to do your 111s or your option trades, this is a great way to get your return. And that's exactly what I'm doing. I'm targeting a 15% return, and 5% of it's coming from this. So I only have to trade to make 10%. That's a lot better than it was a year ago when I had to earn the whole 15% by trading. So because I only need 2/3 the amount of positions that I needed, I'm taking 1/3 less risk than I was a year ago, just by default. So these are some of the selling points of doing this. And I don't expect anyone to finish this seminar and say, oh, that was great, I know everything, let me go click the buttons. I did this today because this 4-week option opens today. Okay, and it closes tomorrow. So you have all day today and all day tomorrow until tomorrow afternoon to go in here and decide what you want to do. And then
Yeah, that put them in on Thursday morning before the market opens.
if you do it Thursday morning, Hal, you got to do it before 7:30 Central. And I've even seen it go away before then. If you want to do it Thursday morning, you better wake up at like 5 or 6 o'clock Central and do it. I don't know what time it doesn't vanish at a consistent date. Okay. So,
Hey, Ed,
mhm.
there was somebody on the chat, I forgot who it was that was saying it. They were talking about how they had this chunk of money that it was like, it doesn't matter if I lose it all or whatever.
Yeah.
And I would strongly suggest to that person, whoever it was, that they don't think that way. You can't lose your principal. I mean, that's got to be your top priority, is to preserve your
Yeah.
principal
And
money.
Tony, that is a phenomenal observation. That was actually in Bobby's prior session, if I remember correctly. And whoever that was, I and everyone here totally relates that. This is my spec money. This is my, I can afford to lose it money. Don't look at it that way. Look at it as your educational or experimentation money to figure out what the heck you're doing besides what you're doing now. Like as you experiment with these option things, you don't want to take all your savings and do that. You want to take a little tiny amount of it and do it.
Yeah, exactly. Just use a small amount of money that has the same effect.
Yeah.
Large amount of money.
And if you're I can afford to lose it is $5,000, and you go in there and you start YOLOing some meme stocks and you blow up 4,000 of it, first, you're going to feel horrible that you only have 1,000 left. Secondly, and this is huge, if you're in your 20s or 30s or even 40s or whatever, like that $4,000 in that example that you just lost is $4,000. It's not going to compound and grow and grow and grow. If you're 28 years or 25 and you're 40 years from retirement and you lose $4,000, that's $4,000 that you could have put in the S&P 500 and let it multiply, I don't know, 8 times, 10 times over the next 40 years. I can't even, I'd have to do the math, but a lot. It would multiply a lot of times. So that might be the equivalent of $60,000 in money when you turn 65 that you just, quote, blew on a meme stock because you're trying to turn your 5 into 10 right now. So speculation has costs down the road, in my opinion, other than just what you're losing in the here and now. So I totally agree with what you just said. And again, no slight at all to whoever said it. It is a common perception with money. Like, that's my hard saved money. That's the money I'll never touch. That's the money I'm saving for a house. And this is my spec money. Well, it is different, but ultimately it's all your money and should kind of be more or less treated the same way. So I agree with you on that. Tony, you posted something here. Let's see what it is.
Hey, Ed, I suggest everybody go to this link I just posted. It's the future value calculator. You start playing with that thing, you'll start realizing how much money you give up when you let your principal disappear.
That's great. And look, I'm gonna go find one now because I have a similar thing pinned somewhere. Let me go see where I have that thing.
How I use that thing is I just play around with numbers, like how much I'm starting with and how much, what percent return I want per week, or I don't know what I send exactly. Some of them you can send the link with my formula already in there, but basically, I figured out I wanted to get a certain return per week, and that's what I'm using. And then, so then you pick how many years you want, multiply times 52, and that tells you how many dollars per week you have to make on whatever those numbers are you have in there. You know, the starting balance, and then how much you want to add to it every week. Like, so say you want to add $100 a week, put those numbers in this calculator and look how much money it is in 10 years or 20 years. And these guys have 30 or 40, you know, twice as many years as you and I have, you know?
This is great stuff. The power of compound interest, and again, Bobby went into this in his class. I'm looking for what I posted then. For those of you who are in his class, I posted something like this. It was from the government, and it was this is a good one. It's very good, Tony. This other one is even better. It gives you ranges, like if you type in 10% plus or minus 2%, it shows you the plus or minus over your compounding period. You can ask how much I need to invest to hit a certain goal down the road. You can,
You have that.
That's a lot of what this does. And
Where is it? Did you post it?
I can't find it, unfortunately.
It's at www.investor.gov is the calculator.
Oh, okay. I'll check it out.
And that was me. My name's Isabel Fodge. I was the one that was on
Thank you, Isabel.
Dr. Gaines' class. But I literally just have this money sitting in my Fidelity account that I didn't really even know that I had. So it was just a 401k plan that was with my old job that was in San Antonio.
Okay. And in that regard, have you rolled your 401k into an IRA?
Well, here's what I don't really understand about the whole deal is it was a 401k plan that I had, and I had to be vested into the company for 4 years in order to keep part of it. So when I left Frost, I actually have part of their, like I have stocks as well with them, which I had no idea that I had. And I mean, it's grown since it's been sitting in there, obviously. And because I didn't actually really know I had it until after I found out that I had this IRA with my part-time job at North Face.
So that's super common. My guess is whatever is left in that account has been vested to you. Usually, like when you work for an employer and you do it, they have a 3% match. You put in 3% and they put in 3%. Your 3% is yours. The 3% they put in now comes to you in 1/5 per year over the next 5 years. So this year you earn 20% of that 3% that they gave you. Next year, 40% of it is yours. The next year, 60, the next year, 80. And finally, after 5 years, that whole piece that they give you now in 5 years is fully vested to you. In that example, if you worked for this company for 1 year and did the 3% match, and then you worked for them the second year and did the 3% match, and then you left, you have 1 year where you got 20% and then 20% the next year, and then they take back the other money. It goes back to them. The second year, you have 20% vesting period because you're only with them for 1 year, and the rest of that money goes back to them. Whatever's left in there is yours and fully vested. So you can actually take that money out of the 401k with company X and roll it into whatever brokerage account, like wherever you guys just opened your account to do Bobby's class. If you opened a regular account, fine. If you opened an IRA account, you can roll that old employer account directly into the new account. You just do an account transfer. You don't take possession of the money. You talk to your new brokerage, you say, hey, I want to roll this from my old broker. They'll guide you on what docs to fill out, and they'll process it, and they'll transfer the money over. And then it's yours to do with whatever you want. And then your old company doesn't have access to it anymore, and you have full blown access to it where you have it. And then every time you leave a job, you just let the dust settle on that 401k that you're leaving behind, and you can roll that one into your existing 401, your existing IRA that you've opened. So, as you younger people bounce from job to job, like y'all might have 5 different employers or whatever, or 10. There's a lot of job movement versus what used to happen. And you might find yourself with 4 or 5 or 8 different 401ks all over the place. I would suggest you roll them as soon as you leave the other company and you see what is vested in yours, roll it. Don't leave a whole bunch of accounts all over the place where you have to wonder if you're remembering them all, or if something happens to you, it'll be impossible for your loved ones to find out. As well as, like, how do you even track what you're in when it's all over the place? It's always better in one place for that type of thing. So take your 401k money, whatever is vested to you will be in that account. Whatever's not vested, they're going to yank out of there, and roll that money away from your employer and go get control of it yourself. I have found that investors.gov thing. It's in the link. So go ahead and click on that now if you guys want to. Any other questions? What else do y'all have? Did I miss anything? Let me cover the secondary market real quick. In a nutshell, like, we can get 4.75 on a 4-week right now. Whoever that was, I don't know if it was Hal or Tony, someone mentioned the secondary market. Oh, I can go get 4.3. So go get the 4.3, even if you have to pay a $5 ticket charge to do it, because you're way better off than earning 0.3 or 0.4 in the brokerage account. Go spend a little money so you can make a whole bunch of money. It's definitely money well spent. But the secondary market is inferior to the auction market, because the auction market is the primary market. It's the source. And when we buy it at auction, we are buying it at auction the same price as the big people who are buying it at auction. The secondary market is when they have taken, it's when I go to sell that 15,000 that I needed out of my 50, they buy it back from me, and they buy it back at a price where they think they can mark it up a few pennies and go sell it to someone else. And that's going to result in a lower yield than if I had bought it at auction. So kind of just accept as a given, the secondary market is inferior to the auction market, but the secondary market is far superior to no market at all. Don't let yourself be taken by the man. Don't let your brokerage account make the spread on your money. You go make the spread on your money. Everyone, Bobby's like, we're all little hedge fund managers. I couldn't agree more with that. And part of being a hedge fund manager is figuring out the best thing to stuff in our little accounts. And I'm just telling you, taking your excess buying power that you're not using and putting it in the T-bills, you're gonna raise your yield by that 4.75%. So if you think you're gonna earn 10% this year, you're gonna earn 14.75. What's the risk? I've kind of gone through it today. This is the least risky thing you will ever do in the investment world. The least risky thing. It's the most guaranteed, and it has the least likely value fluctuation of basically anything out there. Short of a CD, where a CD you're buying it for A and you're selling it and it matures for A. But if you buy a CD through a broker and you need to sell that CD early, you're going to get a bad price compared to a T-bill, because CDs aren't liquid like T-bills are. That broker has to buy that CD back from you and then resell it. And they're going to make a point or two on you, not 0.01. They're going to make like a full $1 per 100 or $2. They have, again, I hate to get excited, but it's one of the last areas of weak regulation in the securities world. And bond dealers just take full advantage of it. They will stick it to you because people don't know what they're doing. Not our concern. We're keeping it short. We're keeping it in T-bills. We're doing it at auction. We're doing it in the secondary market. Very, very, very little opportunity for the brokers to take advantage of us.
Hey, Ed,
Yep.
looks like from what the guy was saying earlier, it makes sense to me. You could build your bond ladder with the secondary market, and then as they expire, then you could go to the auction and pick them up there and eliminate that spread that you're losing.
All that is viable. All I can say there is, when you're looking at it, just compare the two. Like, okay, I can buy a secondary right now today for this, or I can wait 4 days and buy it in the auction and it'll settle in a week and I'll earn that. And then calculate the amount of money it is. You're correct. You might actually end up getting a few more dollars by going into the secondary market. With the amounts I'm dealing with, I would rather wait and miss interest for a few days and just get the higher rate and be done with it. I don't really want to mess with the secondary market, but I'm picky and I have decades of experience doing this kind of stuff. So I'm fine going there and tinkering and fiddling. You know, like I like tinkering and fiddling. So, but because this is so fresh and new, don't be intimidated and stop and say, forget it. That was all over my head. I'm not doing it. I can only earn an extra $1,200 a year anyway, based on the example he gave. $12,000 a year over the next 10 years is $12,000. Over the next 40 years, it's $48,000. Like, you got to compound everything out like that. Like if I blow my 5, it's only 5. Well, hold on. It is only 5 now, but what's it going to cost you if you just stuck it in an S&P 500 fund and not YOLO'd it? You know, there's an opportunity cost when we lose money or don't earn money. There's an opportunity cost that we can't regain, if that makes sense. So, any more questions or thoughts? If not, I always enjoy these things. It didn't quite go as smoothly as I want, but it's live. So, hey, we got to take what we can get. I am super available. If you have questions, write your questions down. I would kindly suggest you review this video and/or the first video. You might actually want to review the first one. I drilled down a little more, and I don't think it was nearly as lengthy as this one. So you might want to review that one after you have your questions down, or if you have your questions down now, review that 1-hour video and hit me up for help. So I'm in the Discord. Notional Ed's Journey is my room. You can go there and post your question. If you join the Discord, you can click. Here, I'll show you guys this too. It's a little tutorial on the Discord again. So you can go into here, the top button here. This is if you want to go into the Discord and you see all these rooms. If you click here, it exposes all the private conversations you've had. I've had quite a bit of them. Okay, so you would just basically go in here and you can either type Notional Ed and it'll bring me up. Okay, you just click on that. And then you will have started. That's how you post here. You find me anywhere, Notional Ed, and just click on it. And then send me, it'll be a little thing where you can send me a message. Here, I'll click on Evan real quick just to show you. See, message at Evan. So if you go into me and just find Notional and click Notional, you can put your message right here, boom. It sends me the message. You will be listed here under my direct messages, and there'll be a little dot. So I'll see it. I'm more than happy to help everyone. Zero charge. I love helping. By my last estimate, I've helped over $40 million worth of money go into T-bills that I know of. And that's like just what people have either flat out told me or have implied that they're dealing with. And then there's tons of people who have helped. I don't have any idea. So as far as I'm concerned, I've helped like maybe 50 million or more dollars earn 4.75 instead of the stupid brokerage firm making 0.4 on it and us making nothing. So that gives me great satisfaction. The other thing that gives me great satisfaction for you young people is to go in here and go click that link, please. That link where, get back to it. The link where I posted the compound interest. I think Isabel, you might have given us that link, investors.gov, investor.gov. And there's a compound interest calculator. Like, go do that and play around with it and figure out, like, if I start saving this amount of money now, what's it going to be worth when I'm 67? And here's the other thing, and I heard what Bobby was saying earlier, and the common thought is, well, yeah, I need to save, I'm going to save. And then something happens, you're like, okay, I'm only 25, I'll wait until I'm 26. I'm only 32, I'll wait until I'm 33. I was only going to put $3,000 in anyway, it's just $3,000. All those things are true, but here's the real truth. The real truth is, it's not the 3,000 you were going to put in this year that you're waiting until next year to put in. It's down the road when you're 66 and you have one more year to hit Social Security, and that's when you're going to tap your retirement accounts. If you start now instead of 1 year from now, you have one more year of compounding on the tail end. So if you wait, when you hit 67, you have 1 year less of compounding. If you do it now, you have one more year of compounding. The 3,000 is almost immaterial. You have an extra year of compounding for that to grow. The market goes up an average of whatever, 9, 10-ish% per year. If you've got $1 million in a retirement account at 67, you might have 1.1 million if you had one more year to let it grow. So it's not the money in the year now, it's the tail end year when you don't have that extra year of growth for all the money you're saving between now and then. I really hope that makes sense. That by itself is invaluable. If you don't understand compound interest and how it can help you, or if you're in the business, your clients, and especially the younger people, if you're in your 20s, if you're getting in your 30s, you're starting to drag behind. You better start running faster. If you're in your 20s or early 20s, calculate how much money you need to save for the next 15 years and stop, and then watch what that grows to over the next 30 years. Like, it's just incredible what compound interest does. So study up on it. You'll do yourself a favor. Let's see, you can add my 45,000. Okay, thanks, Tony. Every little bit counts. I love hearing it. So I'm a free resource. I'm an enthusiastic resource. I'm a talkative resource. The price you have to pay is you have to listen to me yakety yak yak. But if you don't mind, I'm 62. I have literally 40-something years in the investment markets in one way, shape, or form. I actually bought an ounce of gold in the 70s when I was a teenager and sold it years later for hundreds of dollars, and that gave me the fever. And I've also been in the insurance business. I've had a mortgage license. I've done financial planning and budgeting. And now I'm semi-retired. So, and I also have real estate experience. I currently own a bunch of real estate that I manage myself, and I have my trading account, which you guys got to see today. You got to see my 2 trading accounts. So now you know what I have in my trading account. So that's what I do. I love helping others. So please don't hesitate to ping me. If you're in Bobby's class and you're not clear on how to get in touch with me, ask him. I'm not going to blow you off. I mean it. Message me. I'm happy to help. With that, I'm going to go. We're going to post this in the Discord somewhere. I don't know where. It's been a pleasure. And hit me up with your questions. We can take it from there. And if that's all, I'm going to thank you all. And we'll just end it there.
Thanks, Ed.
Thanks, everyone.